South Africa's economy expanded in the third quarter, albeit at a slower pace. According to Stats SA's GDP expanded 0.5%, down from 0.9% previously. That outcome was in line with forecasts. 9 of the 10 major industries strengthened, with mining, agriculture and trade leading growth. Mining output rose 2.3%, driven mainly by platinum group metals. Agriculture notched its fourth straight increase, while the trade sector also delivered another quarter of broad-based gains. Sibanye-Stillwater has reached a 3-year wage agreement at its South African gold operations, bringing an end to talks that began in July. Now, the deal was signed by unions including AMCU, NUM, UASA and Solidarity. The agreement provides average annual increases of about 5.4% when including all benefits. CEO Richard Stewart says the deal reflects constructive engagement with organized labor and provides stability for the group's gold operations. FirstRand says its half-year performance is tracking as expected, supported by a gradually improving economic backdrop. The lenders shared a trading update saying advances growth is firming across South African and UK, underpinning net interest income. Non-interest revenue is also gaining momentum, lifted by better insurance results, stronger global markets income and private equity realizations. FirstRand has reiterated that full-year earnings should rise by the high mid-teens. Araxi says it's delivered a resilient first-half performance as demand for its products continued to grow despite weak business confidence. The fintech companies posted revenue growth of just over 2%, supported by a standout showing from the payments division. Headline earnings per share came in 1.8% higher. Looking ahead, Araxi says the improvement seen in recent months is expected to carry through the rest of the financial year, with both its payments and software divisions supported by strengthening sales pipelines. The group also remains cash flush, with 303 million rand available to fund growth, acquisitions and further buybacks. Equitas has raised over 700 million rand through an oversubscribed accelerated book build. The logistics property group will issue just over 41 million new shares at 17.25 rand each. That's a 1.3% discount to its 30-day volume-weighted average price. Equitas says the proceeds will fund projects in its development pipeline, which includes a Tiger Brands facility and the expansion of Premier's unit in Gauteng. Glencore's ferrochrome venture in South Africa has warned of retrenchments, and that relates to 2 of its ferrochrome smelters. The company says a new electricity tariff proposal presented by Eskom only supports the continued operation of the Lion smelter, but the Bushhoek and Wonderkop smelters remain unviable under the current tariffs. Formal retrenchment notices and voluntary severance offers were issued yesterday. These will take effect next Tuesday unless government presents a viable solution before the 8th. Without that, both smelters will be placed on care and maintenance from January. Shaftesbury Capital has reported improved trading with strong momentum across its West End portfolio during the July to October trading period. The real estate group says leasing activity is strong, with 367 new deals secured at rents above previous levels. Occupancy is also holding up well, with only a small portion of space still available to let. Shaftesbury has added that footfall and sales across Covent Garden, Soho Carnaby Street and Chinatown continue to improve, supported by a wave of new store openings and an extensive marketing push.